Hey, good evening. Dan Fitzpatrick here at StockMarketMentor.com on Monday, March 3rd. I want to look at McDermott here because I'm going to give you a trade. But first, before I do, one thing I'm going to mention is that, and most of the members know about this, you guys, and if you're watching the videos anyway, we're changing, we're migrating Stock Market Mentor over, and there's going to be a pretty new, it's going to be really cool. It already is cool. You guys just haven't seen it yet, but I have. And because of the migration, you never know if we're going to have any problems. We don't think so. Otherwise, we wouldn't be doing it. But because we are, we're going to take care of that in advance, and we're going to be offering our products at a discount to take advantage of, or I should say to make up for the problems that we don't think you're going to have. So how's that? Anyway, Gary will be letting you know more details on that. I prefer not to talk about prices on stuff because I just do the stocks. So anyway, just wanted to give you the heads up about that. So if you've been thinking about buying like the 59-minute trader or shorting stocks or something like that, don't do it because you'll get a better price probably in the next couple days. Okay. Anyway, okay, McDermott. It was interesting. I haven't been watching this stock very long, for a while anyway, because it just kind of hasn't been doing much. But as you know, I have been noting this turnaround here. Nice moving average crossover. By the way, a lot of people wrongly trade on these crossovers like, oh, well, the 50 is crossing over the 200-day moving average, so it must be time to buy. Well, that didn't work out too well for you. So as it, you know, and I see this a lot. A lot of times the bullish crossovers mark the top, and the bearish crossovers tend to mark the bottom, it seems like. So the point is, this stock looked like it was doing well, was trickling along the 50-day moving average, and then what happened? Company announces earnings, and they get crushed. I had a couple people in our forum mention the stock, and I don't think any of them were displeased. I certainly didn't interpret it that way, but I get the sense that some folks were sitting on this stock underwater. And my suggestion is this, is just an observation that I want to make. Don't enter a stock unless you know what your exit is. And so it's like, oh, well, I'm buying it at 8 and I'm going to sell at 14. Well, good for you. Okay, me too. But you got to know what your downside exit is. You need to know exactly why you're in a stock. You also need to know whether it is one that you want to hold over earnings, and you better know when earnings are. In other words, don't just buy the stock because you think it's going up, because it might go up all the way up until the time that it goes down. So with McDermott, the point is that this stock was not acting very well, and into earnings, if the stock hasn't been really selling off, then there's no technical reason to expect it to do a big pop on earnings. It might happen, but you're hoping. You have no basis for that. So with McDermott, this is a stock that you really didn't want to be holding over earnings. You should have some kind of discipline, no matter what it is, just have some of it. And if the stock's close to hitting your stop, like let's say you say, well, my stop is at $8. Well, your stop hasn't been hit, but you've got a catalyst, earnings, that if the catalyst is negative, if it's a negative catalyst for the stop's going to gap right down through your stop. So let's say you have a stop set at $8. Stock opens up here tomorrow at 7:35. Do you think your $8 stop is going to get hit? I do. Do you think you're going to be able to sell it at $8? I don't. Your stop gets hit, even though it's an $8 stop, $7.95, whatever it is. That just triggers a market order. Boom, you sell at the open. By the way, how many folks do you think are going to be figuring that out tomorrow? My bet is a whole bunch of them. You think there are a few stops set at $8? Yep. Do you think some of them are set there in accounts of your buddies, your fellow retail traders? I do. So you know what I think is going to happen tomorrow? I think this stock, I'm not predicting, but this is what I'm looking for. This stock is going to gap down, and it's probably going to retrace some of this move. So what I would suggest doing is, if you're not long the stock, if you are long the stock, don't sell first thing in the morning. Just don't. Put a stop 1 or 2% below where the opening print is, and just figure you're already screwed for about 80 cents. Okay, you lost this money. You lost this money from here to here. Stick it out, write it down for a couple more percent before you sell, and my bet is you're not going to be selling. You're going to be kind of waiting for the stock to come back up so you can get a little of your money back. Now, if you're not long the stock and you're looking for a trade, I think you want to watch how this stock acts at the open, and then if 3-4 minutes later it is higher than the opening print, I think you got a nice trade to the long side. I'll be in the forum working on this tomorrow, and so hopefully I'll see you there if you're a member. If you're not, then I won't see you there unless you join tonight. By the way, you can hoodwink me. You can say, well, I can join tonight and then get in the forum and trade that thing, and then I can cancel. Yeah, you can. It's really okay. I just want you there. Case in point, though, Deckers. I was looking for what I'm looking at McDermott. Stock gaps down, looking for a move higher. I was looking for that same move in Deckers. It didn't happen. The point is, this is not free money. When you see a stock gap down, you have to watch it. So in this case, there really wasn't any trade on Deckers. I'm hoping that there is going to be a trade on McDermott, but if there's not, I'm not going to try to make something happen. So, okay, that's it for this free trade video, and I'll see you guys next time.